Hey guys, welcome back to the channel. Jeremy here. I've got some big news for you on mortgage forbearance. I've been following this all year on the channel, and the most recent mortgage forbearance extension was scheduled to expire at the end of September. Well, guess what? It's been extended again. And so starting in October, it's been extended somewhat indefinitely until COVID is over and 6 months past then. So for anyone out there who's having tough times and wants to get your mortgage payments halted, you still have an opportunity to do this. You don't have to show any proof. All you have to do is verbally tell them that you've been affected by COVID in some way. Crazy, right? Do you think people might be taking advantage of this? Hey guys, Jeremy and Lily here. Thank you so much for the overwhelming support of the channel. And thank you for the 10,000 views on one of our recent videos. Please help us reach 1,000 subscribers by just clicking the subscribe button. It's completely free. Don't forget to smash the like button and leave a comment that says AirPods for a chance to win a pair of AirPod Pros that Lily's giving away to one of our first 1,000 subscribers. Let me know in the comments what creative things you think people might be doing with their money they should be paying on their mortgage. Okay, I want to show you a short clip from Jason Walter, who does a great job covering this clip. He's also a CPA.
Hey, welcome back. It's Jason Walter here. In today's video, I have a big update regarding mortgage loan forbearances. This is because there was a big drop in the number of people who have exited forbearance plans, plus there was a huge announcement regarding an extension of the forbearance program. So this is according to Black Knight. They report an update regarding mortgage loan forbearance numbers on a weekly basis, and this is as of Friday, October 8th. So they report that the number of active forbearance plans actually dropped by 11% since Tuesday, marking the largest weekly decline in 12 months.
That's really good news for the economy. I think a lot of people were anticipating that forbearance was going to be over, and so they started canceling and getting out of those programs, and then they simply extended it again. The top line here is the total number of forbearances throughout COVID. There was a lot of speculation and chatter about all of these forbearances that might turn into foreclosures and then flood the market with houses for sale, which would cause a potential crash of the market. With all these coming down, you can see that that's no longer a concern. In a minute, he goes through some math showing how these things are averaging, turning out on the tail end after forbearance. He does some quick math in a minute, referring to 22,000 getting sold or refied, and that's only about a 1.7% of the houses for sale right now. So it's just minuscule and will have no relative effect on the market in general. So that insignificant of a number should not have any effect on the housing market.
So let's dive in here. So as we all know, there was a peak of people who are in active forbearances in May of last year of around 4.7 million. Now we're down to 1.39 million. So the number of active forbearance plans fell by 177,000 this week. So now we have 1.3 million people in forbearance, representing 2.6% of all active US mortgages. Forbearances have declined by 294,000 over the past 30 days. Let's talk about this big decrease of 294,000 in forbearance. So when we look at the actual data from the Mortgage Bankers Association, they also report an update about what people do when they end their forbearance plans every single week. In the most recent data we have, they basically break down what people do when they end their forbearance plans. What are they doing to pay back their missed mortgage payments, right? So of the cumulative forbearance exits for the period from June 1st, 2020 through September 26, 2021, here's what people did when they exited the forbearance plan. And keep in mind, you do have to pay back all these payments, right? So about 29% resulted in a loan deferral or partial claim, where all the missed mortgage payments are just added to the back end of the loan, and the term of the loan just gets extended, but the housing payment remains exactly the same. So the vast majority are doing that.
I also did this on all of my rental properties, any and every loan that I had personally for either of my businesses. It was a great program for people to kind of hunker down and save their cash to try to weather this storm. If you'll hit the subscribe button, I'll give Lily a piece of turkey. Thank you.
And 22% approximately continued to make their monthly mortgage payments even though they didn't have to. And then 16.1% exited with a loss mitigation plan in place yet. That's bad news. These people should reach out to loan servicers and pay back and enter into some sort of plan in order to pay back all the.
I think that 16% is one piece that he missed in his factor that he shows you in a second. Because if they're dealing with a loss mitigation company, I'm pretty sure those are probably going to hit the market for sale.
12.5% resulted in reinstatements. What that basically means is that when the people exited forbearance, they made a one-time lump sum payment to pay back all their missed mortgage payments. Continued to make their monthly mortgage payments even though they didn't have to. And then 16.1% exited with a loss mitigation plan in place yet. That's bad news. These people should reach out to loan servicers and pay back and enter into some sort of plan in order to pay back all these missed payments, right?
The 16.1% haven't come up with a plan. So those actually could hit the market for sale. Those could turn into foreclosures, etc. The 16.1 is a little more than double the 7.4 that he talks about in a minute in his calculations about how it might affect the market. And so with some simple math, I think we should triple the effect that he mentions here in a minute.
5% resulted in reinstatements. What that basically means is that when the people exited forbearance, they made a one-time lump sum payment to pay back all their missed mortgage payments, even though they didn't have to. And then 12% did a loan modification. But here's a key takeaway here. 7.4% resulted in loans paid off through either a refi or by selling their houses. This number, and I've been tracking this every single week for many months, this number about 7.4% has been fairly consistent for the entire year. I haven't really seen any big fluctuations in this. So going back to this report from Black Knight, so they're saying that over the last 30 days, right, 294,000 have ended their forbearance plans. So if history repeats itself and 7.4% either refi or sell their houses, that would mean that 22,000 people who have ended their forbearance plans last 30 days with either refi or sell their houses. So let's just say that all of them sell their houses. The most recent stats we have for housing inventory, meaning the number of houses listed for sale in the US, is August 2021. If you look at August, there's about 1.29 million houses available for sale.
Yep.
So what impact would 22,000 houses, if that were to hit the market today across the United States, what impact would that have on the housing market? Nothing. It would have zero effect whatsoever.
In other words, the 22,000 houses or families that he mentioned divided by the 1.3 million housing supply would only be about 1.7% of the housing supply. So he's saying it's so small, it won't affect the housing market and the prices related to it. I think another piece of this that he's missing a bit, and Jason, you do a fantastic job when I grow up, right? But the group he's talking about either refied or sold. If they sold, they hit the market. If they refi, they don't hit the market, so they would have even less of effect than what he's suggesting. So maybe we could cut this one in half, just guessing, and I think we need to add this 16.1 to it. So if I did some quick math and cut this 7.4 in half, and then if I added this 16.1 and assumed all those were going to get back on the market for sale, some quick rough numbers would be about 4.25 or 4.25% of the US housing market that could be affected by these forbearances, and houses that coming out of forbearance would go onto the market for sale, add houses to the inventory, which would increase the supply and potentially put some downside pressure on housing prices. Again, I think that number is pretty small and insignificant, but I do think it's larger than what Jason is highlighting.
I think there's gonna be a lot of people, a lot of misinformation out there saying that, hey, 294,000, it sounds like a big number, right? It sounds like it could affect the housing market, but when you actually look at the number of people, what they have done when they exited forbearance, it's really not going to have any effect whatsoever. Unless this number is going to be drastically different over the next 30 days, which I don't really see that because this number hasn't been changing very much. In any case, that's the first data I want to share with you regarding what's going on with the forbearance numbers. But the biggest news that we have is actually regarding this. So this is the deadline for applying for an initial forbearance plan. So I've been reporting this on the channel for quite a bit now. When I look at, this is by the way on the Consumer Financial Protection Bureau's website. It's a government website. They have a great website about who's eligible for forbearance, how long does it last, et cetera, et cetera. But so let's just read here and I'll kind of explain this. So it says, when is a deadline for applying for initial forbearance, right? If your loan is backed by HUD or FHA, USDA, or the VA, you can request an initial COVID hardship forbearance as long as the COVID-19 national emergency is in place. In my opinion, the government's going to be doing everything they can in order to avoid a foreclosure crisis or to impact the housing market greatly. So they are going to be extending this until the national emergency is in place or when it expires. And who's to say when that's going to happen? So that's one point I want to make up, because a lot of people are saying this is going to cause a housing crisis once it actually expires, but it's not going to expire until the national emergency is in place. In addition, for loans that are backed by Fannie Mae or Freddie Mac, there's still not a deadline for requesting initial forbearance. So as of today, people who have a loan that's backed by Fannie or Freddie can still request an initial forbearance plan.
So if you happen to have a commercial loan on a property, that is not a federally backed loan, and therefore it's not going to qualify for forbearance. If you happen to have some other kind of small bank mortgage loan that is not backed by the federal government, it may not qualify either. I actually had 2 commercial loans with a regional bank, and even though they didn't have to, they did let me do a forbearance on those. So if you're outside one of these government programs and you do need some assistance, I would encourage you to call your lender to ask them if they are offering something like this.
So the FHA announced today new and extended COVID relief options for borrowers recently or newly struggling to make their mortgage payments because of the pandemic, and for senior homeowners with home equity conversion mortgages who need assistance to remain in their houses. So now the FHA is now providing up to 6 months of forbearance for borrowers requesting an initial forbearance plan between October 1st, 2021 and the end of the COVID-19 national emergency. And on top of that, an additional 6 months if the forbearance or HECM extension is exhausted and expires before the end of the COVID-19 national emergency. So it says here, our top priority is to help as many individuals and families as possible to recover from this pandemic and keep their houses. This is from the Principal Deputy Assistant Secretary for Housing. For FHA, this means that we will continue to work through all of our channels, mortgage servicers, housing counselors, and other federal partners to ensure we get the positive outcomes struggling homeowners need. Here's all the dates here that you should be aware of to request an initial forbearance. But big picture here, as of October 21st, 2021, through the end of the national emergency, you can request up to a 12-month forbearance plan if you have an FHA loan. When you look at the USDA's website, they actually announced this also on September 27th, and they said the purpose of this notice is to announce the removal of the September 30th, 2021 deadline for a borrower to request loan assistance due to COVID-19 national emergency. Borrowers may request assistance until the end of the national emergency is declared. Servicers are expected to grant payment forbearance based on borrowers' verbal or written attestation to this financial hardship. So keep this in mind. If you have a loan that's backed by the federal government, meaning FHA, VA, USDA, or a loan that's backed by Fannie or Freddie Mac, you can contact your loan servicer and request an initial forbearance plan as long as you have a financial hardship due directly or indirectly to COVID-19. And you don't have to provide any documentations to prove that you have this financial hardship. And it says here, right here on USDA's website.
So did you catch that? Verbal, right? Nothing written. I'm pretty sure everyone's been affected by COVID, right?
If you have a USDA loan, you can get up to a 12-month forbearance plan. So what do you think about this, guys? This is a big update. This extension of the September 30th that we've been all talking about has been taken away.
So the fact that mortgage forbearances have been extended doesn't surprise me at all. I completely expected that to happen. I do think it's a great program for folks who need it. I also think there's going to be some misuse of this program. The good news is that a lot of people have come off of this program, and all of these mortgages in forbearance are not going to end up as a foreclosure or end up flooding the market, causing a housing crash. Worst case scenario, somewhere between about 1.7% of the housing market up to maybe 4.25%. This is going to be great for families because they can hang on to their house if they need to. It's not going to cause a flood of foreclosures. Don't forget to smash the like button to support the channel. We need less than 100 subscribers to get monetized and supported by YouTube. Really appreciate all of your amazing support, and we can use your help by getting more subscribers by clicking the like button. Every time you leave a comment that says AirPods, you're registered to win a pair of Apple AirPod Pros that Lily is giving away to one of our 1,000 subscribers. Thank you so much for your support, and we'll see you next week. Don't forget to leave a comment that says AirPods or Lily to register to win a pair of Apple AirPod Pros. Oh, and although I am a licensed CPA and have 3 business degrees, I'm just a guy on YouTube with my dog, so be sure to contact your professionals before making any investment decisions. One key to getting the best interest rates is to build and maintain great credit. For a limited time, IdentityGuard.com is now offering my subscribers a 33% discount on their services. They search the dark web for things like my driver's license, passport, my credit card numbers, and when they find it, they actually delete it. See the link in the show notes below.